Let's turn to business news now with Anusha Bradley, who's in the Auckland studio with us. What's the latest on the tower takeover that Anna was just briefly talking about?
Yeah, so yesterday we talked about how there was an Australian and a Canadian company both bidding for Tower. Well, today Tower has accepted Suncorp, that's Australian company Suncorp's offer of $1.40 a share. That beats the rival offer from the Canadian company Fairfax Financial, which was $1.17. It still needs approval from the Commerce Commission, and also 75% of Tower's shareholders need to approve it as well. So it's not all signed on the dotted line just yet. But interestingly, Tower's shares were in a trading halt until the decision today, and they resumed trading at 3 p.m. and their shares about 15%. So it's a sign that maybe shareholders do like the deal.
Okay. Tegel has tripled its profit, Tegel chicken?
Yeah, good news for Tegel. New Zealanders love chicken. We're eating more and more of it every year, 5% growth a year apparently, and we're exporting more of it as well. It's all really good news for Tegel, which is the largest poultry producer in the country. So last year it made a profit of $34.2 million. It's not as good as it seems though. Tegel says lower chicken prices here in New Zealand is squeezing its margins, and it's blaming those lower prices for not producing the profits it said it would make when it first listed on the New Zealand Stock Exchange in May last year.
That's right. There was a pretty aggressive sales pitch attached to that listing,
yeah, it was
wasn't
a
there?
big listing.
Yep.
So back then it said it would make $44 million this year. It's only made $34 million, so a bit disappointing. On the upside, the CEO thinks that the prices will stabilise. The market's growing, we're eating more chicken, and it's also investing a lot in automation, better machines, better factories, reducing costs there, and it's growing its free-range products. It now accounts for a quarter of its sales, and it can sell a lot more, sell that for high prices as well.
Absolutely.
So, yeah.
Share market operator NZX may be headed for a form of a shake-up, Anusha?
Yeah, some might say it's long overdue.
Yep.
So the NZX has been criticised for not attracting companies to list on the market, especially its smaller markets. It's got two smaller markets. One's called Next and one's AX. They were created a couple of years ago. It was created just to attract smaller companies, and it's just failed to do that. So the problem is that companies say that it's just too expensive and cumbersome to do this. They often choose to list in Australia instead, and NZX is also facing competition from peer-to-peer markets like Snowball, where it's really easy to raise money and not quite cheaply as well. So the NZX's new chief executive, Mark Peterson, he was appointed a couple of months ago. He's mooted the idea of combining these smaller markets into a single one and making it more attractive. It's now going to consult on these ideas and decide what to do.
As you say, possibly not before time. What happened on the markets today?
The New Zealand stock market, the NZX 50 gained 30 points to a fresh new high of 7,626. The Australian market's down 6 points to 5,713. On the currency markets, the Kiwi dollar's buying 73.03 US cents and 96.07 Australian.
Anusha Bradley, thank you very much indeed.